Welcome to Blockchain Basement. On today's episode, we're going to talk about the second largest U.S. bank failure, 5 things to watch in Bitcoin this week, alts, kind of meh, all this and more on today's Blockchain Basement. Let's go. Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're gonna screw me, at least pull my hair.
Hell yeah. What you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now.
Level. So I don't even know if we're gonna get back below there, but if we do, that's kind of where we
All right, welcome into the basement, everybody. We're gonna have a really good show for you guys today. A little bit more low key, a little bit more chill. We just got the 3 of us in here today. So yes, I was talking with food in my mouth. They love to run this start while I'm trying to slam food down the gullet, so to speak. I did see TJ's chicken salad in there. Actually, Allie pointed out that feeling a little lonely, saying I never have the chicken salad anymore.
Coming soon this week, but today's lunch is sponsored by Tony D.
Yeah, Tony D bringing the meats today. Made some really good sausage and peppers.
He's pretty passionate about food.
He is.
Yeah.
I've been calling him Chef Tony recently, so we got to get him on the show here, guys. If you don't know Tony D, he helps out Frankie Candles in the Candle Mafia. I don't know if he's the consigliere or what his official role is over there. But yeah, he's right-hand man to Frankie Candles, helps him with all sorts of stuff. Also, just awesome guy here generally around the office, and makes really good food. So yeah, we're gonna have some good stuff to talk about today. Obviously, the big news overall, First Republic Bank going into receivership, getting taken over by JP Morgan. We're gonna talk about that a little bit later into the show, as far as kind of what's wrong with that and why, and kind of some weird interesting developments there. But I almost forgot to shout out you guys out. Shout out to all of you guys. You guys are the ones that make the show. We love hearing from you guys. Please ask the questions in the chat. We'll try to get to as many of those as we can today. We got Blazing 2JZ, Jeremy Lister, Danny Carney, Crypto Naughty, RevoCraft, Hope E, ZTCom, Blazing 2JZ, RevoCraft. I already said that. The Deadwood, Dodd Slave, The Real Crypto, Stevo, Chemistry Bro, Big Hands Dan, Poohin 78 Div, Radio Face Crypto, Manly Crypto, White Rabbit, Real Crimson Caravan Company, Joe Ether, Crow, HRC, Aztec World, and many more. We love all of you guys. So yeah, if you're happy to be alive this Monday morning, happy to be in Bitcoin, happy to be out of the dollar and have a plan and a path to freedom, smash that like button. We always appreciate it if you can smash that likes. We do hit our 420 like goal almost every single day. So if you can be a part of that, we appreciate it. And I do love it when you guys comment and say, hey, I was the 420th like. I always love to see who gets to fill that role. So
yeah, it's it's important for us to kind of push past the YouTube algorithm of suppressed information and financial freedom. And I feel like the organic spread, hitting the like, share it with your friends, copy the link and send it with a family member. I had a really interesting interaction with my uncle. I've talked to him a few times since 2020 when I went into Bitcoin, and things have changed really drastically in a downward measure for him. And he hit me up, basically just making fun of me for still being involved with crypto. And
Really?
Yeah, and that's someone I've tried to help, kind of escape the coming flu season calamity, because he was in the services industry. He was a blackjack dealer, hospitality for Colorado, locked out of his workplace for an extended period of time, and his life changed drastically. And just getting past the FUD of just mainstream thought and getting in front of the masses is really important. I feel like right now, inflation is heating up, job losses are heating up, job replacements are heating up, and people need this message probably more now than ever, I feel like, in my bones. So
yeah, it's
get it out
definitely
there.
becoming a lot more relevant. And you even mentioned inflation even over the weekend.
Yeah.
And, some of your experiences with that.
Yeah.
I thought that was kind of a cool story you're saying.
Yeah.
Go ahead. Yeah.
Well, I mean, I go to Costco. I have a lot of kids, and we buy. It was about 5 or 6 months ago. It was about $400 to $500, about twice a month, give or take. Now it's $600, probably twice or 3 times a month. So my daughter came and asked me. She's like, "Dad, why is this costing more?" She was just really curious about what's going on in the actual money market, because I talked to them about Bitcoin. They know that when they have more Bitcoin, they get more go-karts, more cool things. And I just showed her a picture, kind of a picture graphic of what would $20 buy you in 1920, what would $20 buy you in 1960, and then what does $20 buy you now? And I compare, the first shopping cart's full of goods, all that. 1960, it's about half as full. And then in the 2014 picture, there was a picture of bleach, basically, or a few items like bleach and a few things. And then I showed her the same kind of picture organization of what Bitcoin bought you in 2014 to what Bitcoin buys you now. And it was a really cool way to kind of explain it in the best terms I feel like kids learn in is illustration.
Yeah.
And it really seemed to click for her. And she was actually able to, kind of understand the idea of supply and demand in general, which is really proud moment for me as a dad, because I know they're not teaching this in school. I know that mainstream, just regular people aren't listening to this type of conversation. And I am hell-bent on my children understanding it so that they can, better position themselves in the future with hard tangible assets and good cryptocurrencies. So
yeah, I love that. You're being a great dad, teaching a very valuable lesson there. They call that the shopping cart test or the grocery cart test.
Yeah.
Which is really traditionally the best way, in my opinion, to gauge inflation is do exactly what you're just doing. Hey, take $20 to the store. What fits in your cart when you're checking out now versus in the past? And that's how a lot of people, you can say like, oh, you can tell me inflation's not, it's only 1% all you want, but my grocery bill's up 15% or 20%. Chemistry Bro saying my frozen berries are up 25% from a year ago. So that, that's the case in point right there. I love, you guys can't see it, but Drew's over here checking his trades.
Yeah, I'm in a little trade right now.
Sweats or
I'm in
a
a scalp trade right now. I have a very small leverage trading position. What the funniest thing is for me is when I'm sitting here scalp trading, like maybe I'll lose $20 on a short or something like that and just get wrecked because I'm working with a really small bag. Yeah. But my spot position goes up by $6,000 to $10,000. You know what I mean? So I'm almost like reversing the markets.
You're hedging your hedge.
Yeah.
No, I love it.
Yeah. I just gotta, I'm playing around with trading and, just trying to build a bag of stable coins to buy more speculative altcoin projects with, on top of what I'm already doing, because DCA gets cut into quite often on my week to week from the cost of goods going up. So half of what I did, like I went to Costco and then I bought a bunch of pepper and strawberry plants and things like that and just planted them in the garden just to keep moving the buck forward and trying to produce more food. So I'm spending less. So it's even help.
Speaking of trading, we'll come check in on the markets here real quick. We got a little bit of a pullback for Bitcoin coming in at 28.2 right now, about 5.2% pullback on the 24-hour. I was looking at this. I don't know. You guys probably talked about this Thursday and Friday. Here's the chart here for basically this is the 7-day. I mean, there was that massive dump.
Yeah.
I believe that was Wednesday night. It could have been Thursday. That a lot of people were speculating was a U.S. government dump. And then it pretty much immediately recovered most of that, kind of got right back up to this point. And then we saw kind of the sell-off here. What was this morning or last night? Yeah, last night.
Yep.
But yeah, it was, so did you guys talk about this on the coverage there?
Yeah, absolutely. And it feels kind of convoluted on what actually happened. What's up, AJ?
A wild AJ has appeared.
Oh,
hey. I asked
Thanks for
Ben,
joining
I was
us.
like, do you need this done by today? He's like, oh no, end of the week. I was like, okay, here I come. Yeah.
AJ's up there grinding. And I was asking him right beforehand if he could join us. He's like, I got to get this done. But here we go.
Apparently, I thought I was on like a timeline.
Yeah.
Nope.
No, glad to have you. Thanks for joining us. But yeah, on the price dump and the Mt. Gox rumors and the government rumors, what we saw, it was Arkham Intelligence was kind of under the fire for it. And The details that I was able to come across are really that only 19 cents had moved into the government wallet and nothing major had came out of the wallet.
So no sales.
Right. And the Mt. Gox address didn't show any movement. So that's still a kind of a big question in my mind on what ended up being behind that dump. So I don't think it was ever solved. It was only just kind of a rumor dispelled that it was the government or Mt. Gox dumping at the same time.
And we do know we've got the FOMC meeting coming up this Wednesday. So that will probably take a little bit of the action or, the interest off the markets a little bit. A lot of big traders like to just wait, let those events go on before re-entering position. So wouldn't surprise me if we have a mostly sideways week outside of maybe any action on Wednesday. I think pretty much they're going to raise it 25 basis points. I don't think it's going to have a dramatic impact at this point. Might go down a little bit, pull back slightly, but we'll get into some things to keep an eye on this week. Real quick, though, I did want to mention this. I thought this was interesting. Shared by Preston. Is it Pish? Yeah, Pish. Alex Gladstein from the Human Rights Foundation, somebody we cover here a lot. Just a new book I'm adding to the reading list you guys might want to check out. Hidden Repression, How the IMF and the World Bank Sell Exploitation as Development. Alex Gladstein. This guy was saying he wished he could get 20 million people that would work for global NGOs to read this book cover to cover. Beyond eye-opening. Bravo. So anyway, just wanted to share that with you guys. Thought it sounds like a good book. But all right, so second biggest U.S. bank failure. We are talking about First Republic Bank going into receivership over the weekend. Now looks like acquired by JP Morgan. So 5 things to know in Bitcoin this week. After setting below 29,000, Bitcoin price action is already facing more potential pressure. The First Republic Bank being placed in public receivership and taken over by JP Morgan Chase. This was the volatility we were just looking at. Classic flash volatility accompanying Bitcoin's segue into the weekly and the monthly candle after April finished. And that's another thing to keep in mind, guys, when you're looking at a chart like this and you're seeing a lot of volatility, a lot of these huge dump here. You got to look at this is 10 p.m. on the 30th of April. So you're talking hours before the monthly close. You get somebody pushing this price action down. And so there's a lot of big positions, a lot of big whales that have futures and, contracts open that are incentivized to get the price to probably, obviously in this 28K level before the close. And then that's when you see it recover. So that's something to keep an eye on when you're monthly close, weekly close, obviously quarterly close. The bigger the time frame, the more relevant that volatility is going to become because there's going to be more money on the line there. So.
Yeah, I don't know. It kind of feels like we've satisfied the dip gods. I don't know. I don't know, man. We went to 27.
We did. And Frank was doing some TA today, and that's kind of what I'm be interested to see if the basis points can impact this or not. There's still, easily could go back down, I think, to 25K, retest that level. I mean, there's still over the course of the year, I think we could even still go back down and retest 20 at some point. I'm not sure about when, but it feels like right now, we're banging our heads against 30, which the more we do that, the better as far as breaking through that. But until we decisively flip it and hold that support, I think we're going to range around here for a little while. I don't know. What do you think, AJ? What have you been looking at prices much lately?
Yeah,
Charts?
with price action right now, I think it's pretty bad timing for FOMC, especially if they go with 50 or whatever. It's kind of hard to tell exactly what they're going to do. But what I've been seeing, 3-day Bitcoin chart isn't looking the best, especially when you consider Bitcoin dominance kind of rolling over on a double top, as well as the ES1 exclamation point, like E-mini futures for the stock market, also rolling over on a double top as well. So I definitely see, I'm looking for shorts.
Oh yeah. Okay.
Yeah. I mean, it feels, like I said, it feels healthy to come back and retest 25, even before we go back. I mean, to break 30, and I think it's going to take us a while to really decisively get up into that range. It's going to be tough.
Yeah.
So after closing out the month at 29.3, BTC swiftly dived lower. I always want to say dove, but I guess that's not right. Dived lower as bid liquidity was pulled from the Binance order book. So again, liquidity coming off. Again, a lot of people risking off this week. Bitcoin thus reached bounce targets for some, including the Vanderpop, founder and CEO of trading firm 8, who noted potential strength returning to altcoin markets, which I'm seeing mixed reviews there. Some people talking strength. A lot of people saying a lot of altcoins are looking weak, especially AJ just mentioned that Bitcoin dominance, which we're going to talk about a little bit later in the show. It seems to be, we've got kind of a divergence of some people saying BTC dominance is about to rip. Some people saying they don't see it. So I'm going to kind of go around and poll just so you guys can get ready. I want to see kind of what you guys think. Are we going to see a massive Bitcoin dominance run up like we have in the past, or is it going to be a little bit different this time? It's kind of it's getting right to that inflection point.
Yeah,
so.
it is right on
Right.
that point. And that's the thing. Like, if that goes up, it's actually kind of better. It's bad for alts in short term, but good for alts in long term, because if Bitcoin, goes up 35, 36, whatever, I mean, the alts will follow it eventually. But if Bitcoin dominance rolls over, alts might get like a little pump. You might see like 20%. But then if Bitcoin's down the 20, you can't expect it to last long. So it's a double-edged sword for sure.
Sketch.
It is. It's interesting. So we've got, let's see, still ranging, blah, 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 blah. All right, here we go. JP Morgan takes over First Republic Bank in second biggest U.S. bank failure. And this is just worth pointing out. We're having a lot of the second, third, fourth largest bank failures that have happened in U.S. history. They're happening all within 60 days of each other, whereas like the other one was a standalone. There was like 3 or 4 banks that failed, or there was a bunch of banks, and it all rolled up to, I can't remember what the totals were. I had them before. It was like $380 billion. And then these 2 banks that failed before, it was Signature and Silicon Valley, was about 310. Now we're well over what the 2008 collapse has been. So these collapses are getting bigger and bigger, which is no surprise as we continue to print more and more. But I just want to emphasize that, like, this is the second biggest ever, and it's happening right after the third biggest, right after the fourth biggest. Like, it's not good. I think actually I want to say Silicon Valley Bank was the second biggest.
It was
until this just happened.
Yeah,
so that became third. Now this is second. So despite being heavily priced in, and all the, I'm sure you guys have seen this too, all the Kramer tweets about like, oh, it's good, banking crisis is over, and then boom,
that's the
another
kiss
one
of
dropped.
death right there.
Like all of them are going down now because he says this was the last one. So despite being heavily priced in by markets, the forthcoming 25 basis point hike likely to be announced at May 3rd meeting at the FOMC is still not guaranteed, but I'd say it's heavily favored at this point. I think it's 85% plus. As of May 1st, First Republic Bank shares, of which plunged 75% in April alone, is being placed under public receivership by FDIC. Lenders including PNC, JP Morgan Chase, Citizen Financial Group were among banks bidding for First Republic Bank, with JP Morgan ultimately taking over. More on that in a bit. Reports previously indicate that the deal should have been completed and announced before the start of Asia trading, but this took a little longer to be announced at approximately 8 a.m. UTC. Here are the odds right now. The bets on the Fed following through with the expected raise increase on the FRC new with the market seeing a 90% chance of 0.25 according to CME Group's FedWatch tool. So basically, a lot of people out there saying, oh, they shouldn't raise, they can't raise. We've got another bank failure. It looks like they're going to continue to raise. Now, I do think this will put them where they originally stated they want to be. So hopefully this will be the last one and they can hold for the rest of the year. But we're gonna have to wait and see.
Well, like, I thought that they had no more room to raise rates when those first banking failures happened like a month or two ago. And just like the thought of them continuing to go with raising rates, it makes sense for like saving face and just keeping the pressure on all the way up until the last minute. It makes sense if you're in, if I was in Jerome Powell's position, you got to cause a little bit of, you got to break a couple eggs to make an omelet, basically. And, there will be blood.
No, I agree. I shared a funny one, those things with the ladies yelling at the cats of like, screaming at somebody and says, you said no more rate raises. And it says, no, I said no, more rate raises. No, I'm not stopping this. There's more rate raises coming. And it does feel that way.
A little bit.
And I feel like, to be honest, Jerome Powell's doing a pretty decent job, all things considered.
Yeah, I read a really interesting article about the fallout of First Republic Bank, and kind of that there's like a super big, like, I think they call it like a double standard, but I had a different term for it. But basically they're saying it's a double standard because like in this situation, like all the shareholders got nothing at all. But they were like avoiding the word buyout because something like with the taxpayers like having to cover for like in 2008 where it's like different than Europe. Well, Europe will cover the shareholders to some degree. It's like inversed in Europe the way it is here, and the way here is completely terrible for the shareholders. I want to read it back to get it right in my head, but it was just a really interesting concept.
Yeah.
I can send you that article.
No, that'd be good. In a lot of these situations, like you're saying, they use they change the words around a lot just for public perception. Like you said, like 2008, the bank's getting bailed out the public didn't like now the public perceives a bailout as, oh, taxpayers are bailing out banks. That's bad. We don't like that. So they're not going to call it a bailout anymore. They're not going to say, oh, the government's bailing this company out. They'll say it's going into receivership, or there's a, you know, what do they call it? Not direction, but no, it's like basically a redistribution of the assets. You know, like they just use a lot of these different words to say different things, but realistically what's happening, the government's coming in, they're backstopping it, they're giving them a lot of money. There's a lot of conditions, there's a lot of different names, a lot of different things you can say. You know, but generally, yes, that's what's happening. The bill is getting pushed over to the taxpayers, whether it's somebody just mentioned, didn't they just raise the debt limit? Yes, they did. We covered that last week why they're going to continually have to do that.
I love what you said there, and thinking about, you know, the $680 billion that the banks are negative on their securities investments for, because you're basically just redistributing the losses,
right?
You know, and spreading the pain amongst mid-regional banks, and I think
that's the big issue we have, guys. Is the reason this is a problem when there's not allowed to fail. They take risky bets, and if the risk hits, they take all the profit, and if it misses, they just move the losses off their balance sheet and let the taxpayers pay it. And that's the problem. That's what we keep seeing happening over and over and over when we don't allow these banks to actually go under. You know, and yes, it does hurt people. People lose money. It's bad. It's painful when that happens, but that's what a free market is. So why we need it in order to operate correctly. Otherwise, we get this issue where things just get bigger and bigger and consolidate more and more and more, and then we get these giant centralized things that aren't incentivized to actually help their customers and create better experiences and better user experience. They're just designed to keep feeding the machine, which is what we're in right now, which is just, it's crazy. I mean, eventually, if we can keep on this route, we're only going to have, you know, 4 banks basically. And somebody said it in the chat earlier, you know, all of this stuff going on with all these different banks begs the question, what's the next one to fail? And I have a guess on that. I don't know if it's any of the stuff we prepared today or not, but you know, I don't think we're done seeing bank failures right now.
Yeah, I completely agree. I mean, on Around the Blockchain, like a month ago, DZ asked, like, you know, is this just the beginning for the banks or what? And I was just like, remember, like last year with crypto, with all the insolvencies, it was like this fell and that fell and this fell and that fell. Like, I feel like it's going to be like that this year for the banks.
I agree.
And it already, like, you know, I pat myself on the back for saying that time. Real quick, I found this article on Trust Notes, Teach. I'll Slack it to you.
Okay.
But I just want to read this one little part. It's super interesting. It says, shareholders, the owners of First Republic, have lost about $20 billion in the past month and will receive zero, even though JP Morgan is buying out this bank. This makes the U.S. banking system toxic from an investment perspective, a 2-tier system where the well-connected like Jamie Dimon and his bank are protected by the taxpayer while other banks wipe out investors. That's ugh.
Yeah, it's sick. I mean, it's a crooked system. Somebody else said it's called moral hazard, where they're just disincentivized to serve their customers. They're only incentivized to serve themselves. Yeah, it's not a good look. I do think, let's see, the next one, I think another big one that's notable, another brand name that a lot of people know that could be on the list. I think we covered it pretty early on when we were looking at banking balance sheets. You know, the obvious one was Silicon Valley and then First Republic, but beyond that, not far down the list, I think was Charles Schwab. We looked at being kind of right on the line of not being in good position with their holdings, and you know, their reserves basically are non-existent. So meanwhile, we got Bitcoin weekly and monthly candle coming in closing bullish. So this is what I'm talking about. You can see here where you had let's see, pull this up. There you go. You can see, you know, like somebody was, if it was below here, it would have been closing bearish. So you can see somebody, that's what's so fascinating to me with technical analysis, is somebody was literally pushing it down exactly to the level to flip the monthly bearish, but the price just didn't want to hold down there. So yeah, it's looking pretty good. It looks like obviously there's a lot of buyers at those levels. It got bought back up extremely quickly.
Yeah.
Because we're talking about, I mean, this would be right at the bottom, you know, really 28 even, right at the 27.9, kind of right in that range, holding above it there. So we've got bullish momentum there on the weekly and the monthly. So the longer time frame's looking good, the shorter time frame's looking a little dicey, which again makes sense with where we are in the cycle, where we are with the macro. On-chain transactions are challenging records according to this. So let's see, what do we have? All-time here. all-time high in 2017, and this is for the 30-day. This is Bitcoin price, and these orange here, this would be the Bitcoin transaction number. So then we've got, wow, look at this. Bitcoin
Jeez.
transactions higher than they've ever been before. I mean, this is, even with the price being down, that's pretty cool.
This is all clearly from my daughter buying Bitcoin.
Yeah.
And my daughter and my son each bought $6 worth of Bitcoin.
Did they really?
That's
Yeah, they
awesome.
did.
Wow, I love it.
Yeah.
I have a question from the Golden Jet.
Yeah.
Aren't we at about the point in the 4-year cycle where we top out the relief rally and slowly bleed for a few months? Sell in May, walk away? Question.
Yes-ish. I mean, the timing, we're close to that timing. And I don't think we really pushed all the way up. Like, really, it should be, what are we in May right now?
Yep.
It would be, it'd be a couple weeks out, you know, but
Yeah.
we could have seen that, you know, like, what did we get? Did we get to 32?
No, not recently.
So
No.
I don't think we've seen enough of that run up just yet. I'd give it another 30, 60 days, somewhere in that range. Because you got to remember the 4-year cycle, we call them a 4-year cycle because it's approximately 4 years. It's, you know, it's a certain amount of blocks and they're 10 to 15 minutes. It usually works out to be more like 3 years, 10 months, 3 years, 11 months. So you kind of offset those months a little bit when it comes to the cycle. So that throws it off just a touch. You know, but so I'm still holding out for that run up. I think it would be really, really interesting. Last time in 2019, we saw it during the Bitcoin conference, and I want to say the Bitcoin conference was in June last time that we experienced that big run up. And so if it was in May, you know, like if we see it, we're seeing it a month early because it's 3 years, 11 months, 3 years, 10 months ish. I would love it if we could see that happen during the Bitcoin conference, just, you know, poetically.
Yeah.
But yeah, I'm looking at kind of the second, third, fourth, you know, really the third week of May to where we could see that breakout rally if it's, you know, day by day to following the calendar. But there's no guarantee that we're gonna see that. You know, and then we're in the boring part of the cycle really for the next, you know, until the halving. But the ranges are getting bigger. So if the range was 7 to 10 before, maybe now it's 20 to 28 or 25 to 28 or something like that. But I don't know. What do you guys feel like? Do you feel like do you think we're going to see a mid-year rally like we did in 2019? And was this it, or is there more kind of in the hopper for this year before it gets just super boring? AJ first.
Yeah, sure. Personally, you know, there's always a run up when the halving's a year away. The halving's like projected next March. So I'm looking for the run up end of Q3, Q4. If there is going to be one, that is most likely when it's going to be. Also, another thing you got to keep in mind here is that I'm looking at the chart on my phone. When the uptrend for Bitcoin started at the beginning of 2023, it's a very wide upward channel. And so technically speaking, as long as, like, with the timeline we're on, as long as we stay above 24.5, 25, if it comes down to the bottom of this channel, and I mean, obviously from the 12-hour daily chart, 8-hour chart, 6-hour chart, we're coming down. And how far in the channel? Maybe all the way to the bottom of the channel. But as long as we stay in this channel, we're technically still in an uptrend. And if we break that uptrend officially, like break out and then bearishly retest the bottom of the trend line, that would be really bad. But I also kind of feel like even if we come down to 24, it's not the end of the world. And 24 is a pretty far fall considering where we are now. So I'm like long term, I'm hopeful, but still careful and looking for shorts based off where we are in the channel at the moment.
Yeah, I mean, I feel a little bit. Whoa, that was weird.
All right.
I kind of feel similarly. But basically, what I'm feeling like is that we're going to spend majority of the remainder of this year playing somewhere in the lower 30s. And I do feel like we'll get one kind of large negative macro news event that'll push prices down back into the 20s for some time. And that, in my gut, I'm calling that to be somewhere around October and November, simultaneously right afterwards. Election bids start up, quantitative easing or / a halt to rate hikes, and some injections into the economy to make everyone feel like it's great again, and then it would be pushing upwards from there. So the downward action, like, it's, you know, in my mind, like, I don't want to go too cataclysmic on what could happen in the world. Usually the truth is in the middle. probably will get something bad happen on the macro and push us back down like 25K and then be back off to the races from there at the end of this year after playing in the mid 30s for most of the time. So that's kind of what I'm feeling like it's going to happen. Yeah. I don't know.
Yeah, I like Chemistry Bro there said in 2019 mid-year.
Don't you go
mid-year
dying on
cycle
me.
peak. I was passing the charger behind my back.
Oh.
2019, that mid-year cycle peak was in June, and 560-ish days after the 20K all-time high. 560-ish days from the 69K all-time high would be start of June again. So yeah, that'd be interesting to keep an eye on. Late May, early June. It's right in that range.
Mhm.
I do think we are about 1 year away from. I was looking at the Bitcoin halving calendar.
Is it March 24 when it's planned?
No, we're
March.
basically we're 360 days away right now.
Okay.
I was just looking at.
Okay.
So it's right. It's basically late April, early May, a little bit depending.
Oh, okay. I thought it was March this whole time. I didn't
well,
know.
it's-
I didn't know.
It can move too. So like
Okay.
it could, like because there's like I said, the blocks they take on average 10 to 15 minutes. Sometimes it takes 20 minutes for a block to solve. So
Right.
like if there's a lot of long blocks, as they say, then it could move, but it'll generally be in that range. So this was another thing to keep an eye on. This is not official, but this is, it is a real metric, and you can definitely take something from it. The latest readings from the Crypto Fear and Greed Index show that the market greed is trending back towards levels last seen at Bitcoin's 69,000 all-time high level. So if you've got all these levels right here.
Interesting.
We're ticking all the way back over here. So if I like to look at it here. So we're all the way back up at a 63 in the green.
It's a little quick.
I didn't know that.
Well, I mean, that's what's cool, is that's what shows the sentiment really, even though, like that's how people are feeling. So people are leaning on the bullish side, which again makes me want to lean more on like, hey, a little bit of a pullback, again, and then get back in at a 25 or 20, ride it back up there again. So, just wanted to read through this. This is a little bit to read, but I like this guy, Fabian D. I cover him on this channel quite a lot, so I'm going to retweet this if you guys want to read it on your own time. But all right, okay, fully caught up with the market developments from this week after coming back today. The most meaningful change from last week is the positive earnings. Yeah, so if you guys, I think you guys talked about this on Thursday, but Google and a lot of other companies had strong earnings reports last week. The positive earnings surprises that have been coming in across the board, as well as potential acquisition of First Republic assets for the bidding that has commenced and expected to close before the market opened tomorrow. So this is as of last night. Earnings are doing its job. So this is what's interesting. I think it was Crypto Stevo was asking about this on the morning stream, on the BitBoy morning stream. And this kind of answers the question. He was asking, like, why are stocks up and crypto's down right now?
Yeah.
And it has a lot to do with these earnings. So earnings are doing its job to keep equities elevated at these levels and likely lending support to BTC. So it could have been part of what's helping a little bit on the Bitcoin side. Something to keep in mind for longer term is that positive growth expectations also translates to a more prolonged shift in the liquidity cycle, i.e. it's higher for longer, meaning if people think they're going to continue, these companies are going to grow and produce more money, because equities are more sensitive to the growth cycle and crypto to the liquidity cycle, meaning money supply. Positive earnings will feed more into the former than the latter. So the earnings are going to help, the growth cycle, the equities, the stock companies, more, and the money printing liquidity, whether it's Fed or currency, comptroller, all that sort of stuff. That the liquidity, that's why on market cipher they're always looking at the money flow. When the money flow is going up, you're more likely to have bullish than if it's contracting. It's still apparent to me that crypto markets lack the liquidity to sustain a broad rally, with even ETH giving back some of the dominance to Bitcoin this week. That's something else we're going to look at here, is the dominant stuff. In a nutshell, not much has changed for the crypto landscape. It's still a low liquidity PvP market. Meme coins, anyone? As usual, the emotional roller coaster on CT was more volatile than the price itself, but it's never about what conditions are today. It's about what they will be tomorrow. My views on that haven't changed much from last week. Shared the thread below. The obvious additions of strong earnings and the First Republic takeover, both net positive. So long and the short, and he had some other stuff we may look at, we may not, but basically saying he thinks, the earnings propped up some stuff on the equity side a little bit, and that's positive. But what I wanted to kind of ask you guys, and this is something, it's just interesting. So you've got all these banks, all these companies, right, that own all these businesses. They're invested in all the stock market, and then they create these reports of what they expect the business's earnings to be. Now, like some of these businesses now they beat that earning projection, and I guess it's just asking about the whole stock market thing. But when everything's based on relativeness, meaning like, it's bad. It's good that they beat our projections. Well, what if they just made bad? They just projected low.
Yeah.
Then they pumped their own bags. I don't know. That's something that got me thinking. It's all based on the CPIs, all based on expectations, and meeting expectations. Did we do what the market was expecting us to do?
Yeah.
And so, Google and some of these companies are making more than we thought. Great. Now it's all pumping. But just another reminder to keep in mind, and I've talked about it on the show several times, watch the money supply, watch the Fed, watch the People's Bank of China, watch the Japanese central bank, watch the European Central Bank, Bank of England. Oh, that was funny. I don't know if I pulled that up. Anybody see, I don't know if I saw this or where it was supposed to, the Bank of England changed their logo? Did you guys see that?
They took the money out.
They took the money bags out.
They took the money out of
So
the
it's like
logo.
somebody sitting on a throne with a shield or whatever and a flag, and there's like some money bags sitting down in the corner, and they updated it, and now there's no money.
Oh my
Like, we're
God.
broke, guys. We're not even trying to hide it. Even our logo doesn't have money in it anymore.
Well, listen,
Oh
I
my
mean,
God.
if you're able to set the expectations super low, you're a multinational conglomerate, you got major news organizations regurgitating the information, then that's everyone's expectation, and you're going to beat it even if you just keep the lights on into the next quarter. Then you come up doing better, and more people dump money into your company. So it's a good way to kick skeleton brick and mortar investments and skeleton companies down the road and keep the investments incoming, because that's what they need to do to stay afloat at this point. God, I just keep thinking about the derivatives market over and over again.
Yeah, we were just talking about this. So TJ, so Drew and I were having a conversation about like how much money is in the world, because like I was brainstorming what to do for the price prediction department video for Sunday, and I decided to do it like on HBAR because I know about HBAR. I don't know about how much money is in the world. So anyway, I looked into what he was saying. So basically, like, there are so many different like evaluations on how much money is actually in the world, because money is graded from M0 to M3 based off of how.
Get up on their tongue. You get up on that.
We got BJ in the chat telling you to get
Sorry.
closer to the
Get in
mic.
there.
I got
Is that
you.
actually BJ?
Yeah.
Oh my God. I got.
Yeah,
Yeah, it was just kind of
scoot
strange.
him in there. Scoot him in
Oh,
there.
okay,
That's the
there it
bejesus.
is. So basically, thank you, BJ. I appreciate you, bro.
Yes.
So basically, like how much money is in the world, right? So money, there's a bunch of different evaluations, and it's all based off of, it's like graded from M0 to M3 based off of how liquid the assets are. And so then I was like saying, I forget the number. I even said to you, like, how much money is estimated to be in the world. And then you were like, dude, there's 10 times more of that evaluation just in the derivatives market.
Yeah, absolutely.
Like, that doesn't make any sense, but it makes so much sense. I mean, there's more money in Bitcoin than there is in Tether and USDC combined. I mean,
yeah, it's basically, you're talking, the derivatives market, it's like quadrillions of dollars.
Yeah.
Nobody even really knows how much it is. And it's what all these banks have that's so intertwined, of like loans on top of loans on top of loans on top of loans, that they just create these assets on all this paper money. Hey, speaking of lunch,
I think BJ did that.
fake stuff. Yeah.
That was probably BJ.
So yeah, all right, we're gonna look at a couple more things real quick. This is just, you guys know I like Crypto Donald. He's been calling this pretty well all the way through. I know he took most of his capital off the table around that 30K level. Yeah. And he's saying only one more year of this until the fun begins, in the Duck's opinion, which is kind of what I was just talking about. I do think we're gonna range mostly, basically he's saying, bulls getting blown out, bears getting blown out, bulls getting blown out, bears getting blown out,
BTFO,
bulls getting blown out, so yeah.
I love it.
Basically another year of this, of bears and bulls getting just wrecking each other and laughing and telling each other I told you so.
Yeah.
And then we go back to up only for a couple of years.
I love that, seeing crypto Twitter just taken over by bears. The moment you see a big red Campbell, and then 30 minutes later the bulls are like, yeah, gotcha. You know what I mean? Just back and forth. It's lovely.
And so this is the ultimate debate of this part of the cycle here. He says alts look bad. Other people say alts look good. We've got Caleb Franzen here saying people are predicting that Bitcoin dominance will skyrocket. Here's my take. I don't know yet, because we haven't seen a decisive breakout or rejection at this range. once we get clarity around this major resistance level, I'll listen to what the market is telling me. So this is this is the level AJ was just talking about of it being, you know, it's sitting right on this level, and this goes back to about May of 2021.
Yep.
You know, and it's tapped off this multiple times. This kind of 40, what is this, 46? What was that?
I know right now it's around
Almost
48%.
Yeah, 49. Let's see. It's according to 46.8, 47 according to this. But let's see. My eyes are terrible. Yeah, this was like 48.6 is what he was looking at here. So it's been getting up into this range. Obviously, 1, 2, 3, let's say 4, 5 times rejected off of that level. So I mean, like you said, if it's going to break out, it's going to be pretty decisive. Or, you know, same thing, testing the bottom of this green box. 1, 2, call it 3, 4, 5. I don't know if you want to count that or not, but I mean, you get 5, 6 basically tests into the green box the other way. This is a really tough one to call for me, just because the landscape is so different now than it was in the past when you're talking about stable coins and so many other alts and things on the market. So if you look at like in 2019, so for example, for those of you who don't know, I think it ran all the way, let's see, what it run up to 70% or something crazy like that. Yeah, 84%. This was in 2017. It went as low as 39. It went as low as like 25 at one point, somewhere in there. Ran all the way back up. What is this, the peak here of 20? Yeah, 70% plus.
Holy cow.
So obviously that would be a huge run up. You know, if we get, and it's hard to see. This is a little bit dated. I wish they had better. I'm sure they do on like Glassnode and stuff. But here's just more, you know, November 22 through now. So kind of like the last 6 months. You can see the Bitcoin dominance has fallen from
70%.
70% in 2021, January 2021. 40%. It's really been holding in this 40-ish range for quite some, you know, between 40 and 50 for really quite a while. So, you know, if you're looking at this chart here, I can back out of that, sir. Yeah. I mean, how do you guys feel when it comes to Bitcoin dominance? Just, you know, in your opinion, gut, whatever, do you think we see over this next year Bitcoin dominance on a tear? Do we see it ever getting back into that 70% range again? Or do we think, you know, it's probably has seen its peak? Drew, what's your take?
I think we could see 70 again. I do. Yeah. And that's why I'm not like going ham. Like I see a lot of cool and really strong, smart, focused altcoin projects that I'm talking about now that, you know, I have barely a toenail into, but I'm paying attention to them for after the next altcoin washout and Bitcoin to gain more dominance. That's basically what I'm waiting for. I'm expecting Bitcoin to at least breach the 25 or the 55% mark. And is looking at that graph, I mean, it was at 71% in 2021. Was that the end of 2021 or
it was like
May,
mid? Yeah. I mean, like, I think that it
I'm
absolutely.
sorry, this is January 21.
Is
oh,
it?
okay.
Yeah.
Yeah, I still feel like we could easily, I mean, I think we'll easily get over 55%. 70% would be a tall order, but we might get wrecked in alts just in the short term. Well, you know, I mean, you're thinking about this like on the drive in, I was like, man, it feels like we're already into this market already, but we're really not. We're like barely getting started with, you know, the actual cycle restarting and getting into that bullish momentum. This feels a lot like the fall of 2020, where I had bought Bitcoin and it had gone up to 9K and then back down to 7 or whatever, and just sitting there ranging, and I was going in between being a genius and an idiot one week to the next. You know, so it kind of feels very similar to that time frame. So yeah, I mean, given where we're at right now, I think we could hit that 70% again, but you know, alts are going to get crushed if that does happen. So
what do you think, AJ?
No way is it ever going to go to 70 ever again.
Mm-hmm.
But
ever again.
But Bitcoin is a commodity. It's official. Bitcoin's a commodity.
It's true.
And with alt regulation, if I was ever to be proved wrong by it going to 70, it would be because alts get washed off the face of the earth with regulation. That would be the only way it gets back to 70. At this point in time, the crypto market is too spread out. There are so many alt projects that have utility, that are faster, that are, you know, blockchain trilemma, cross-border payment system better than Bitcoin. So I think Bitcoin has spent its day in the sun. I mean, you have to realize that would be 70% of the entire crypto market cap is just Bitcoin. That's asking for so much. I don't ever see that happening again. But could it, go to 55, 60? I mean, sure. But especially because Bitcoin is a commodity and the alts, like that's the main part of the regulation that remains to be seen. But I don't really have an opinion. I agree with Caleb on if this is going to go up or down from where it is. My best guess, because it's kind of has a little lower high going on. It looks like it's going to fall down to me. Like gun to my head, I'm going to say it's going to fall down, but I very well could be wrong.
Yeah, I will say I agree. I agree with AJ 100%.
This is the great debate between me and AJ.
Is it?
It is.
Well,
we have many
because it's more. There's more solid altcoin projects now. There's a lot more money in stables now, and a lot more trust and use of stable coins now than there was back then. So yeah, I don't see it getting. I think it could go up. I think it could get above 50. My prediction tops out at 55. That's I don't see it getting to above 55. Really, like you said, could it? Sure, 55. Sure, maybe 60. But getting up towards 70 again, I think is going to be it's a tall order, like you said. It's just mostly because of stable coins, even more than other altcoins. Because a lot of people now, once they're in that market, they want to keep their money in digital assets. They want to just move over to a Tether or a USDC and then move it back when that time comes. So, yeah, I agree with you 100%. Also, Crypto Stevo, I agree with you as well. I am a very lucky man. What were you going to say?
Speaking of altcoins, I had a question from GK. He said, new subscriber to the channel. Ben made a video on some altcoins a couple weeks ago. SKL was, I guess that's Scale, was one of them. What are your guys' thoughts on Scale?
Do you know much about Scale, AJ?
I wrote it, but I kind of forget.
Yeah.
So let me refresh my mind on it real fast.
Yeah, I know. I've heard of Scale. I know a little bit about it. I feel like we covered it on here as one of the deeper picks. I'd have to pull it up too, as far as I assume based on the name, if I remember correctly, it has to do with scaling, but that's a big leap. Real quick, while he's looking that up, I had that other question. I think the guy's name was, I want to say Bailey, but
yeah, Bailey Miller.
Should I take 3,000 that's left down 12,000 in my stock market portfolio and put it in ETH? That's a big question. Obviously you can only your entire financial situation, so that's you're gonna have to decide this for yourself.
This is not financial advice.
Right. I will tell you, I pretty much did that. Got out of stock. I wasn't necessarily down that much, but it's gonna recover faster in something like Ethereum than in pretty much any stock that's out there, unless you're in maybe two stocks that have had some kind of appreciation like Ethereum.
I gotta say something.
Yeah, go ahead.
So we're talking about bank failing, Bitcoin dominance, all that conversation. I'm watching Deutsche Bank because I feel like Deutsche Bank is definitely at risk of defaulting the same way that Credit Suisse did.
Yeah, they're definitely.
And and UBS doesn't have that much bandwidth to actually take on Deutsche Bank as well. So that's kind of in my mind when I say 70% potential. We could see Deutsche Bank go down. I think it's the 16th largest bank in the world. Credit Suisse is like number 21. If we see Deutsche Bank go down, things will get real hairy real quick, just in the short term.
Yeah.
Not saying it'll stay there, but
We have 430 people watching right now, 164 likes. But with 430 people here, if all of you guys just stop real quick, smash that like button, we definitely get our 420 like goal for today.
Smash
so
the
if you
likes,
could,
please.
we'd really appreciate that. If you're watching on smart TV, bottom right hand corner, more actions, more options. Hit that like button. If you're on mobile, just close the live chat, hit the like button, open it right back up. And if you're listening on podcast, we are on audio. Hey, thank you.
I want to read BJ's comments.
All
He
right.
said
God.
about Scale. He said, no, it's a meme coin for those who are into scales. It's like furries, but for fish.
Oh my God.
That really made me laugh.
I don't
He
think
also
that's
said
true.
we're 6 days from my prediction of the S storm.
Yeah.
Oh yeah, May 7th is what it
I
said?
think it said
Yeah,
May.
May 7th.
Wait, what
I
was
thought
it?
it was May 19th.
No.
It was the first week
First
of May.
week of
First week of May.
Yeah.
Okay.
Yeah.
So, BJ just has a random prediction for a scary black swan event that crashes all markets and all prices.
I love
7th,
it.
Yeah.
Hell yeah.
I love it.
Here we go.
So just really fast to answer your question, Bailey, I think your name is Bailey.
Right.
Maybe you should Bailey. And then for Scale, I remember searching this, but now that I'm looking at some of this stuff, basically, according to their Twitter, Scale is a network of interconnected EVM blockchains built to bring speed and security to a universe of UX-friendly dApps. So, and then also, this is the main...
Interoperability sounds.
Yes, exactly. And so the main piece of data I really like from the paper was that Dartmouth College did a study to figure out like what the fastest blockchain was in terms of transactions per second and time of finality, and Scale took both of them. I would have to really look into my notes on how they achieved going that fast, but I also know that they're all about like saving gas fees. They've already saved over $1 billion in user gas fees. I remember researching this one. It just there's so many coins, it gets fuzzy. Yeah. But I remember reading this one, and I didn't buy any or anything, but it's definitely one worth looking into. But if Dartmouth College does a study and it says it's faster than everybody else, that's always something to look at. We live in the world of instant gratification, and once these kind of things get integrated into whatever use cases they get integrated into, people are always going to side with what's fastest. So it's definitely worth keeping your eye on.
Yes.
Yeah.
Radio Face asked when hit merch beach towels and hand towels. I'm
Next
not
month.
sure. I'll talk to Morel and see what we can do for you on that, because I could go for a Bitcoin beach towel. I'm not gonna lie.
Did you guys see the fanny packs?
No,
What?
I haven't.
Bro.
They got fanny packs.
Bro,
We
the
have fanny
fanny
packs?
packs.
Nice, love it. So when you guys hear us talking about this debt problem and how, yes, they're kicking the can down the road, they're delaying it, but they can't do it forever. You hear stats like this, and this kind of starts to tell you about why. So over half of the U.S. federal debt, 16 trillion out of the 31 trillion. So that's about what we owe right now, $31 trillion. About 16 trillion of that matures in the next 3 years.
Right.
30% of it in the next 6 months. That's pretty important.
No big deal.
Higher rate debt to replace the low rate debt or inflation runs, meaning we're in higher interest rates now, so we have to continue on that path. Otherwise, interest rates run out of control. It's a rock in a hard place. People don't understand this.
Right.
So $16 trillion is going to start to mature in 3 years. So like this is a major problem that doesn't just go away. And there's only really answers, print your way out of it, because we don't have the money. So, all right. This, again, biggest story of the day. We're going to talk about what the big caveat of it is. JP Morgan will take over First Republic. This is called monopolization. You do not want a monopoly. They are dangerous. It threatens the very essence of capitalism and harms small businesses. No competition means less service. Less service means less freedom. This is from Wendy O.
Yeah.
She's talking about this here. So JP Morgan acquiring the troubled First Republic Bank to take over assets of the troubled First Republic Bank after the seizure of California Department of Financial Protection and Innovation, which, by the way, just worth noting, nobody really getting protected from any of these bank collapses.
Nope.
Like, no protection has actually happened. No matter how much regulation was happening, no matter how many fees were paid, no matter how many attorney bills were paid, no matter how many papers were filled out, no matter how many disclosures were filed, no protection, no oversight. These banks running rampant, making poor decisions, being extremely risky with money that then the taxpayer ends up coming behind and bailing out.
Well,
So
they
again,
knew.
SEC fails again.
They knew ahead of time.
They knew.
I brought it up on Friday. It's like, they knew that they were upside down nearly $700 billion in securities
Right.
that Gensler's overseeing. And he's, I said on Friday, he's like, he's getting someone in trouble for doing the dishes wrong while he lit the entire neighborhood on fire.
Right.
It's completely backwards.
And what kills me about this, Ben and Cassie and I were just talking about it on the Twitter space that Ben hosts twice a week on Twitter. If you haven't been in that space, check it out. It's really cool. We covered a story that literally the FDIC, do you know whose fault? The Silicon Bank, all the banks that failed, do you know whose fault it is? It's crypto's fault.
Yeah.
It's all because they didn't know how to manage crypto's risk and crypto this and crypto that, and it's not our fault. Let's just blame crypto.
Yeah.
Mm-hmm.
It is so frustrating.
Just wait till those high-rise buildings in New York City that aren't being used go up for sale on pennies on the dollar, and we'll see how
I
well.
I have one of those about us in not New York, but in San Francisco.
you?
I'll save it.
Okay.
I'll save it for tomorrow, probably. 'Cause
Okay.
I don't think we're gonna have enough time. But California Department of Finance, like I said, Department of Financial Protection entered an agreement with FDIC, entered into a purchase and assumption agreement with JP Morgan to protect depositors. Trouble started brewing on April 26th when the news about government receivership surfaced. But like you said, like we knew about it. We talked about it. The fact that a YouTube channel that runs in a basement called this months ago.
Right.
That should, I don't know what to say. That's it. That's all we got. Shrugs,
Credits.
Come on, guys. I didn't even go to college. JP Morgan is ineligible to, so this technically legally, JP Morgan should be ineligible to acquire First Republic Bank. It controls 10% of U.S. deposits. It's too big to fail. This will end well. So JP Morgan is among a small number of giant banks that have already amassed more than 10% of nationwide deposits, making the firm ineligible under U.S. regulations to acquire another deposit-taking institution. So there is regulation in place, all these things that they're doing to protect us, regulation in place that says, there is a bank should not control more than 10% of U.S. deposits. Well, now JP Morgan has crossed that threshold, so they will, I'm sure, just revise and update those rules. Even so, this is technically an illegal thing, but nobody votes on it. We don't get any say on it. It all happens in backdoor deals, and nobody gets to say what the interest rates are on any of these deals, who pays for what assets get passed to the government, which ones get passed to the bank, which if you guys go dig into any of these deals, you'll always see the bank gets the best of the best. Any of the bad stuff is 100% backed by the government or the taxpayers. So they have a 100% risk-free assets that they can then bet against, and they just continue to do it over and over and over. So here we go. JP Morgan was able to acquire First Republic Bank despite the rule against one bank controlling more than 10% deposit. JP Morgan now holds $2.4 trillion in deposits. So we got JP Morgan up here. We got every other bank down here trying to fight. And like we've all been saying, there is now no more free market competition. There is no more parity for the banks, no more motivation for them to innovate and provide better services. So if you're keeping score at home, Silicon Valley Bank, gone. Silvergate Bank, gone. Signature Bank, assassinated. Credit Suisse Bank, gone. First Republic Bank, gone. All in the past 60 days. But we've been assured by the fiat banking overlords that all is well, and to expect additional rate hikes.
Right.
This is bullish.
So,
That was perfect.
Yeah, that's what's been going on. That's the landscape we're in right now. Banks are failing. Bitcoin is not. Your funds are only safe if you have them in Bitcoin that you self-custody. So I want to leave you guys with that today. Please withdraw your Bitcoin from exchanges. Hold your own wallets, hold your own keys, however you want to do it. Exit the fiat fake money system. Make a better future for yourself. Make a better future for the world. Buy Bitcoin. Smash the likes. Give somebody a high five. Pat yourself on the back. Keep doing your research. Keep staying involved with the future of money and economy. We always love you guys. Eric Carlson, Gary Ginsler,
I'd say
Crypto Steve-O.
Second Republic Bank.
Yeah, that's pretty good.
I like
Michael
that.
Moore, SAS Finance, Jeff Harbu, B, The Deadwood, Cryptos, Big Hands Dan, Manly Crypto, Manawak, Covert Force, Cool Lightyear, Casino Doggy, White Rabbit, Chemistry Bro, Bungalow Bill, Razmataz, Cryptotonic, Cripson Caravan Company, Raul San Miguel, Cryptos. As always, happy Monday.
Love you guys.
Stay safe. Buy Bitcoin. We're out of here.